Good afternoon, and welcome to our keynote address on the Indian economy. I'm Vedika Bhandarkar, Head of Investment Banking and Vice Chairperson for Credit Suisse in India, and it's my great pleasure to welcome Deepak Parekh to the AIC. Mr. Parekh hardly needs any introduction, and I promise to make this introduction really short, but very quickly, he's the chairman of India's Housing Development Finance Corporation and one of India's most prominent and respected business leaders. Under his leadership, HDFC has extended its business from mortgages into areas including banking, asset management, life insurance, general insurance, and education loans. Besides the HDFC group companies, Mr. Parekh sits on the board of several other leading Indian corporations in various sectors. He is the non-executive chairman of GlaxoSmithKline Pharma in India, the IDFC, and Siemens India, and is also on the boards of several Indian and multinational companies. He is currently a member of the expert group on the restructuring of Hindustan Aeronautics, the expert group recommending ways and means to modernize Indian railways, and the subcommittee of Prime Minister's Council on Trade and Industry for promoting financial inclusion. Mr. Parekh's always been willing to share his ideas and experience. And I cannot think of anybody whose experience better qualifies them to speak to us on today's topic. We know that the growth momentum in India has slowed, creating weaker operating conditions for corporate India. We also saw foreign portfolio investors reduce exposure to India in 2011, although they've been strong buyers of Indian equities so far in 2012. So in spite of having an economy largely driven by domestic demand, India's growth story risks becoming a prominent casualty of global uncertainty. With his deep knowledge of the Indian economy, gained both through a distinguished career in the private sector, as well as being an active member of various eminent economic groups, government-appointed advisory committees, and task forces, Mr. Parekh is uniquely positioned to share expert perspectives on India's economic challenges and how they can be overcome. Please join me in welcoming Mr. Parekh to the AIC.
Thank you, Vedika. Good afternoon. The subject given to me today by Credit Suisse is India's slowdown permanent? Let me rephrase this. Is there a slowdown? Quite evidently, the answer is yes. Is the slowdown permanent? I would confidently say no. Now, if you look at last some years, India enjoyed 9% plus GDP growth for 3 consecutive years in 2006, 2007, 2008, which gave rise to aspirations that we could get to the double-digit number of 10%. The 10% growth aspirations were really squashed by the Lehman crisis, by the global slowdown of the world, and the global GDP slowdown. The financial year 2010 and financial year 2011 also showed a recovery, and in both the years we had a GDP growth of 8.4%. This was commendable despite the world GDP numbers coming down. Now the disappointment has come in this year. The disappointment has come in this year, which is 2011-12. Our financial year ends in a couple of weeks, in March, next week. So 11 and March, up to March 31st, our GDP growth rate is expected to come down to 6.9%. Despite all this, we still remain the second fastest growing nation in the world after China. If you look at the BRIC countries during last year, the 4 BRIC countries, the 3 BRIC countries apart from India, China's GDP growth is slipping below the 9%. Russia's GDP is projected to drop to 3.3% in 12 compared to 4.1 the previous year. And Brazil's GDP growth rate is flat at around 3%. So the question that arises is whether are we in India facing an extra share of flack for a disappointing GDP growth? I think in part the answer is yes. A lot of slowdown is attributed not to external factors, not to global factors, but it's our own doing. It's our own problems. The fallout, as you know, we had 2 large-scale scandals last year, and a little bit of fallout on that has been that the government has come into a paralytic position. There is policy paralysis in our government. After the detection of scandal and after the huge negative publicity, the scandals and scams received all over the world, that brand India got impacted. Many reforms have been stalled because of the present state of our government. Many of you would know that India has a coalition government. There are two large parties, and neither of the large parties is capable of getting enough seats. And even the coalition party that is running the government today, there's a wafer-thin majority. And allies with 10 seats and 20 seats are the weakest link, but they are the strongest outspoken members of the coalition party, and they are capable of stalling reforms, and that is exactly what is happening. Now, the other thing is that, we have a strong democracy in India, and we all take pride about having a democracy. And in democracy, debate, discussion, dissent is acceptable, but not dislocation, not disruption. We've had last year these kinds of dislocation in our parliamentary functions. So the opposition parties have also been playing a very negative role, a non-compromising role in the government. If you see savings rate as a percentage of GDP, the rates are quite high, although this year we came down to 32% from 34%. If you see investments as a percentage of GDP, it is 35%. Previous year it was 36%. This is really due to a slowdown in corporate investments. Economic survey is a document which the Finance Ministry produces a few days before the annual budget. And it was recently released where the government has said that the GDP this year is going to be 6.9%. And it's clearly said that this is a wake-up call for the government. Still, I must reiterate that the basic fundamentals of the economy have still not altered too much. Growth potential remains. Investors still see value in investing in India. Sectors that do not require government approval, sectors that do not require government intervention or approvals are thriving. And we can talk about it. There are a number of sectors in India that are thriving, like auto ancillaries, two-wheeler, cement, FMCG, pharma, financial sector. But where it has government intervention, where it requires prior approval of government, these are areas which have slowed down. Again, in the economic survey, the government has pegged the GDP growth in this year from April 1 to next March 12-13 at 7.6%. I think this is a reasonable target. We'll get to around 6.97 this year. This is not too ambitious, and this is certainly achievable according to me. What we need is faster approvals from the government. Interest rates have peaked in India, and we need a faster reduction of interest rates. Tomorrow, our deputy governor, whom I just bumped into, he just mentioned that I'm going to contradict whatever you have said today. And because he decides the interest rates and the policies. But inflation has been contained. Inflation has come down to 6 to 7%. We need commodity prices to be stable, particularly oil, crude. Oil is the biggest external risk we have today. 87% of India's oil is imported. And it costs us more than $110 billion every year to import this amount of oil. Iran's problem is separate, but oil is our weakest link. And if oil, which is 120, 125, remains at its present level, we should be okay. But if it becomes $150, then again, there is a big danger. Let's see the analysis of the slowdown. Why is the slowdown? Analyzing the slowdown. If you take India's GDP, the three components of GDP are services, agriculture, and industry. Services is the predominant part in India's GDP. Services account for 56% of India's GDP. And services sector has been the force with which GDP has been growing. And service sector is growing is almost double digit. It grew at 9.4% last year, in the current year that is. Industry. Agriculture's contribution has been steadily decreasing, even though India is the largest producer of rice in the world. India is the largest producer of wheat in the world. So agriculture share is come down to 18% in GDP. Now this 18% of GDP grew at 2.5%. Engine of growth, as I said, is the service sector. The slowdown in GDP is most pronounced in the industrial sector. Poor performance of industry and poor performance of some sectors of the industry. Growth in manufacturing slowed down to 4.4% from April to January compared to almost double that last year. In the second half of the financial year, the mining sector showed a negative growth. Growth in capital goods has been negative, but consumer goods have continued to grow significantly faster than the previous year. What aggravated the slowdown? I would say the mining scandal, the telecom scandal, problems with power projects that require coal, power projects that require gas. We have an imbroglio and we have to sit and solve these issues. We'll talk about it. Slow FDI approvals. Government has not been able to do any major restructuring, any major reforms rather. Structural reforms have not taken place. FDI in retail, FDI in insurance, government is caught because the opposition doesn't support it. And even some members of the coalition party are not giving them the requisite support. So these bills, whether it's land acquisition bill, these bills are sort of paralyzed in parliament. They are placed in parliament, but they cannot be discussed because if a voting happens and the government doesn't get a majority, it means the government has falls and there could be fresh elections. So you don't want to precipitate an issue. So you introduce a bill, you debate it, but you don't put it to vote. Again, last year we had high oil prices, high inflation, high interest rates. Now, some of the roadblocks that we talked about have been since addressed. Let me say the Prime Minister's office has set up a committee of secretaries to sort out the power sector. Now, what they have done is Coal India is the culprit. Coal India has gone and signed fuel supply agreements with many power projects that are under implementation. They don't have enough coal. Simultaneously, they have not invested enough in evacuating, exploring coal. So the government has instructed Coal India that since you have signed commitments, you have got contracts with power producers, if you don't have local coal, you import coal and you supply coal. It's your responsibility for signing the FSAs. And you have to bear the cost of import. And we will penalize you if you don't supply 80% of the plant load factor. And if you supply more than 90%, we will incentivize you. So they've put the onus on Coal India. Coal India has other problems we can talk about. As I said, interest rate cycles have peaked. Inflation has come off and from the double digits that we've seen last year. The union budget, which we had a few days ago, has given a huge thrust to infrastructure. There were more sectors included in the viability gap funding, which is a large amount which the government allocates, that if the viability of any infrastructure project is wanting, the viability gap funding sources of the government of India can substitute that. This is particularly necessary in the PPP projects, public-private partnership projects, where some amount of money is needed, a grant is needed for kickstart some of these projects. Tax-free bonds for infrastructure like the railway finance, the power finance, National Housing Bank, they've doubled the exemption, the fundraising capacity of these public sector organizations. So retail investors can put money in these bonds which are tax-free. It's increased to 12 billion from 6 billion. External commercial borrowing, foreign borrowings have been permitted for the power sector, even to substitute some rupee expenditure. Withholding tax was another big irritant. Anyone who had an external commercial debt had a withholding tax of 20%. This withholding tax has been reduced to 5%. Road Ministry and Surface Transport Ministry allocation of budgets have been significantly enhanced. Now, if you look at a macro level in India, it took us 60 years to become $1 trillion economy after independence, 60 years. We became a $1 trillion economy in 2007. We will become a $2 trillion economy next year. So it's taken 7 years to become a double from $1 trillion to $2 trillion economy, while it took us 60 years to become just $1 trillion economy. And 2 to 4 in 2020, the estimate is India will become a $4 trillion economy. So things may be bad last year, but the potential I see in India, the growth potential is there. And the government has to play a little positive role to increase the GDP growth. Despite government, we can grow. I think despite government, India can grow at 7%. We are not growing because of government. We are going irrespective of the government. In a way, we are a unique country. We are an old civilization, but a young population. As everyone knows, the demographics of India, we have 60% of our people under the age of 30. Large English-speaking workforce. We produce 2 million graduates a year and 650,000 engineers a year. This is one of the largest number of graduates you'll find. Urbanization is taking place, is happening at a rapid pace. Today, urban population in India is about 31%. Again, estimates are that 2030, this will become 40%. So there's a huge influx. We will need all what is necessary for new townships, investments in cities, investments in periphery of existing cities. They will develop, and all the infrastructure that needs to be invested with growth in cities or extension of cities or new cities will happen. Middle class numbers are rising significantly. India's strength is the middle class, the spending class. Indian economy today is running on consumption. It's a consumption-based economy. And mind you, when I was growing up, consumption was a dirty word. Consumption was a bad word. Today, consumption is in the epicenter of India's growth story. So the middle class numbers are increasing. What is driving this change is affordability. If you see sectors like small cars, nano car, or telecom. Telecom is the best example of growth. In 2000, tele-density in India was only 0.4%. It's an amazing number. In 2000, I don't know how we lived in 2000. Tele-density was 0.4%. Today it is 60. In 2010, it was 68%. Today it is 78%. And in 2020, it is going to be 135%. So the growth in telecom sector has been phenomenal, particularly after the mobile telephony. And if you look at the tariffs, one of the lowest tariffs in the world are tariffs in India. In 2000, when the tele-density was 0.4, our tariffs were 5 rupees and 20 paise per minute. Today, it is 43 paise per minute, less than half of 1 rupee. And it's expected to go down in the 30s in 2020. So what can pricing do for growth in any sector? It is the pricing, it is the affordability that drives change. Similarly, if you look at two-wheelers, it's a big industry in India, scooters, motorbikes. It had a 3.6 million sales in 2000. 2000, the sales for two-wheelers were 3.6 million, which had a 20% penetration level per household. In 2010, this 3.6 became 11.8. 11.8 million two-wheelers were sold in 2010, which constituted 35% of the household. Now, estimates are that in 2020, this 35 will go to 70. And India will have 25 million two-wheelers. So the two-wheeler industry, the auto industry, I've got similar numbers for auto, and again, it's doubling of number of units per household, penetration per household. Our telecom network, as I said, is one of the largest in the world, a subscriber base of 900 million people. Take the financial sector, potential of the financial sector. It is estimated by Boston Consulting together with the Indian Bankers Association in 2011 came out with a report that new branches of banks in this decade, 2010 to 2020, are going to be 50,000 new branches of banks. All banks put together, public, private, and foreign. 50,000 in 1 year. This is 3 times more than the last decade. ATMs, again, their prediction is 200,000 ATMs will be added this decade. Again, 3 times more than what we could achieve last decade. So the banking sector is also going to increase rapidly with the growth in business, with the growth in ATM, the facilities given to individuals. In my business, in our area, in the mortgage business, again, the same report says that in 2000, outstanding mortgages were 5 trillion rupees, all banks, HDFC put together. This 5 trillion is going to go to 40 trillion rupees. So again, 8 times growth in 10 years. So the projections that we have because of middle class, growth in middle class number, because of aspirations to own a small house, because of urbanization, because it's possible to get jobs in the service sector, because there's a double income family, because there is some saving, it is possible that these numbers can be achieved according to us. Because housing as a percentage of GDP in India is one of the lowest in the world, in the emerging economies. It is only 9%. In 1980, when we started in 78, 79, outstanding mortgages as a percentage of GDP was 3%. After 33 years, it's gone to 9%. We have funded 4 million homes up to now, and now banks are doing mortgages, but even today, only outstanding mortgages only account for 9% of GDP. Mobile banking, a couple of mobile companies like Airtel and Vodafone have started mobile banking. Funds transfers can be done on the telephone, and it's quite easy. All the amounts are quite modest, but at least mobile fund transfer has happened. Wealth management services are growing exponentially. Insurance sector is also growing. Now let's talk a little about the quality of banks' assets. The gross NPAs of banks have increased to 2.8% of the total credit at the end of September. This September 11 numbers. And this 2.8 has gone up from 2.3%. But if you analyze the bank's balance sheet, I would add to this the restructured loan. The central bank has allowed banks to restructure some loans which are sticky loans, but they have to show these restructured loans separately in the balance sheet. So one has to estimate what percentage of the restructured loans will go bad or what percentage will come back. So if you add the 2.8 and add the restructured loan, the number does increase. Then IT and BPO is one of the strongholds of India. 55% of all IT BPO business comes from India. India has a 55% share of global offshore market. It's one of the largest employers in India. It has created 2.7 million direct jobs and 9 million indirect jobs. Industry this year has hired 230,000 people in this. So 230,000 individuals have joined the IT BPO sector. If you take the large companies like Tata's and Infosys and Wipro, on an average they take about 25 to 35,000 people every year. So this is a huge area where employment is possible. Aggregate revenue this year is going to reach $100 billion. This is one thing which helps us in our cost of crude, because this revenue comes from abroad. And we spend 100 billion on crude import and we receive 100 billion from IT and BPO exports. And in 2020, this number is an astronomical number. Again, if you see the FII flows into India in the last 2-3 years, in 2010, India got a huge amount of $29 billion net inflow. $29 billion in calendar year 2010. 2011 was a negative year. Not significant, $500 million went out net. And 2012, the first 2.5 months, we've seen $8.6 billion coming in. 8.6. Our Sensex today is at 13 times forward earnings. 1 year forward, PE is around 13 times. FDI, India doesn't get a large amount of FDI, but there is a modest inflow. This year we expect to get about 35 billion. We've received about 30 billion and about 35 is expected. February numbers are 30. So I would say under the opportunities for investment are strong. One needs patience, one needs understanding, and one needs a lot of patience to be successful. India clearly is a micro story. There are many, many good companies, but there are many bad companies. There are many companies with poor governance or no governance. There are many companies which will not disclose balance sheets properly on time, or you can't rely on the balance sheet. So when you invest in India, you have to be selective, you have to be very cautious. You have to go after the management, you have to see how seasoned the management is, how clean the management is, what type of business the company is doing. Is it dependent only on government for imports, for raw materials or sales? You have to be careful when you invest in India. Patience is needed, but a lot of research is needed to determine who is a good promoter, who is not a reliable promoter. So I would say that 2012 would be a better year, and political hiccups are bound to be there, but don't see any likelihood of an early poll. So I'm quite optimistic that this negative growth which we've had in 11-12 will be reversed, and we will get around mid 7% GDP growth this year. So although I don't think the drop in GDP is permanent, I think it was this year due to government inaction, but I see India bouncing back in the current year. Thank you.
Happy to take questions.
14, 20.
Hi, I had a question about the banking system. You mentioned the non-performing loans. My sense is that, of course, part of the NPAs come from the power sector, which is riddled with its own problems. But some of it is it right that some of it is also because of all the priority sector lending targets and the fact that the government and the central bank are pushing them more aggressively? If that's the case, I wonder if what you make of all the priority sector targets and whether it's time to revise some of them or rethink the whole idea.
No, I think it's about time that the priority sector targets and the component of priority sector, what makes up the priority sector, it hasn't changed in 40 years, 30 years. It's about time we say that priority sector components have to change. And if you have financial inclusion as your target, then there should be just one priority sector. You want the rural community to live better, you want the rural community to have access to credit, just put that as priority sector. Why do you need exports and employment generation and SMEs? And because they are specialized institutions to help SMEs. They are specialized financial institutions to help agriculture like NABARD or SIDBI. So you don't need all these sectors as, lending to individuals to own a truck is priority sector. I think people are innovative enough and entrepreneurial enough. If they get money, they'll run a couple of trucks themselves. You don't have to call it a priority sector. So I think there is a discussion on revision of priority sector definition. I won't be surprised if the quantum comes down also, because I won't be surprised this year you will see a reduction in SLR CRR also, because I think too much of preemption is done by probably one of the largest, almost 35%. Was this 29 and 4 today? SLR and CRR. 25 and 4, 30%. Sorry. 25 and 4, 29% is what is 29% is what is preempted. So, and I think the capital also, if you see in this budget, the government has very clearly spelled out. They've allocated about $3-4 billion, $3 billion, 16,000 crores, $3 billion for recapitalization of public sector banks. They've also said that we'll set up a holding company. So all the shares of government in public sector banks will be in one company. And so that company can borrow money or that company can access markets or something, because we've still not got over the psychological barrier that public sector banks, government will continue to hold 51%. But the growth of private sector banks is so rapid that the public sector's share of business has certainly come down over the last decade. And this will continue. Have I answered your question? Yeah.
Recently, we've seen some deterioration in some of the macro indicators like the fiscal deficit and the current account deficit. Do you see any reversal of that trend in the short term?
We had a much larger fiscal deficit this year than what was projected. It was projected at 4.6. We ended up with 5.9. 5.9 is a high fiscal deficit. The target in the current year is 5.1%. Again, I think this is a realistic target. You will see you will see that subsidies will come down. I think from April 1, if I'm not mistaken, there is a recess in Parliament. Once the Parliament breaks for summer holidays, one day after that, they will increase fuel prices, diesel prices. They don't like to do it during Parliament session because the opposition really make a meal out of it. So it is done on the first day after the Parliament. There's a recess in Parliament, and then it's a month or so afterwards, 6 weeks afterwards, they reconvene. But there is an intention of reducing urea fertilizer subsidy, and which will also happen. And you will see a reduction in crude, and so there is a definite intent to reduce fiscal. If there was no intent, this would have been a populist budget. This was not a populist budget at all. There was no giveaways and freebies to the taxpayers. And so I think the government has done a responsible job, reasonably responsible job, by not, because they're losing popularity, they're not trying to become popular and gain votes by giving away a budget and increasing significantly the budget estimates of deficit. So I think you will see that it is achievable, and I think in the next 6 weeks, one month, you will see some action on fertilizer and on fuel. Regarding current account deficit, yes, we've had a current account deficit, but our invisible earnings, as I said, if you add one other sector, like for instance, I mentioned IT and BPO, this year it'll be about $100 million. But if you add NRI remittances as invisibles, NRI remittances this year will be $75 billion. NRIs, non-repatriable remittances into India. NRIs who are working abroad, who are sending money home on a non-repatriable basis. So the people are working abroad, a lot of IT sector people go alone, and the family is in India, particularly in the Middle East. And the money comes back to India. So this is a huge foreign exchange. It helps there. But current account deficit, I guess we have to do something about it. But fiscal deficit is the worst. Fiscal deficit can be contained if we are just streamline some of the subsidies, and I feel something will happen.
Yes. Can you give us some insight on how has the inflation and the rate cycle affected middle class propensity to consume and buy houses?
I think you put it in two questions. Let me first talk about inflation. The main component of inflation when it went to double digits was food inflation. Food inflation really went up. As I said, it was ironical that the year we have the largest food grain production in our history, food inflation goes up. So part of it was artificial. We had certain commodities, you may recall during the year, that the onions in the market disappeared. Onion prices went up 10 times, over 100 rupees a kilo. And onion is a staple food in Indian food preparation. Now, this was a 4-week phenomenon, and it had nothing to do with the onion crop. It was only the middlemen, the traders, the middlemen who cornered the stock, did not bring it in the market and made a killing. So it is more speculation, it's more hoarding, which creates this kind of inflation to make traders make quick money on it. But food inflation, the last number which the Reserve Bank released was 6.9%. Inflation number has come down to 6.9%. Now I agree that if you increase fuel prices in order to reduce subsidies, in order to contain fiscal deficit, again, it could add to the inflation because freight cost, travel cost will go up. But I think in India you cannot expect a 2-3% inflation. I have never seen such low inflation numbers. You will see 7-8% GDP growth and you will see 6-7% inflation. You have to live with that, but this is part of India's growth story. If there is zero growth and there is 7% inflation, then we are in deep trouble. But if we can manage a 7%, 8% GDP growth on an annual basis, even if we don't look at 9 and 10, I think 7-8% GDP growth we have seen living in India, we have seen a different India in infrastructure in the last 10 years with this kind of growth. So inflation, food, fuel, power. These are main reasons of inflation. If you see some of the pharmaceutical companies' results in the last 2 quarters, or FMCG, particularly FMCG, the growth in sales turnover has come only on volume growth. 95% on volume, 5% on pricing. So it is inflation in these sectors is not there. If you see even any auto companies or two-wheelers, they've not increased prices of two-wheelers and autos. Now, because there's a 2% increase in excise, marginal prices will go up in autos and two-wheelers because the government has imposed additional excise on 2% on. Regarding your second question on housing, I think in housing we've had a real flat market. Again, housing, you have to divide yourself into a number of categories. First of all, it's residential or commercial. Then you have to put Bombay and Delhi in one category and rest of the country in other categories. Because Bombay and Delhi really are unaffordable. But other cities, the prices are not as high as Bombay, and where the growth is taking place, whether it's Pune or Chennai or Bangalore. So inflation, property prices have remained reasonably flat. In fact, the commercial real estate property prices have come down. Rents have come down significantly. There is surplus commercial space across the country. Commercial space, office space, IT space, malls, SEZs. Residential is the only factor where there's shortage. And housing prices haven't come down. Some builders have marginally reduced it. But I would like to see a much faster and a larger reduction in home prices, because the stock of inventory stock is going up with developers. But a developer would rather pay a 20% interest rate to a money lender than reduce his prices. Because when he reduces prices, all the apartments he sold earlier, everyone will come back and ask for a lower price. So there is reluctance to reduce prices in an existing project or in an existing development. When you start a new development, you can decide what prices you want. So I would say that I expect real estate, I've been an eternal optimist by saying real estate prices will come down. They have not come down. Residential. Commercial has happened. But the builders will have to do something for their surplus stock, to liquidate their surplus stock. And I won't be surprised if some of them selectively give festival discounts or bring special discounts to sell some unsold flats. But I don't expect the prices to go up either in the next 12 months.
How likely do you think the government approval for FDI in the multi-brand retail, and what's the time frame in your opinion? Thank you.
I mentioned about the curse of politics. Take the life insurance sector. The bill for opening up the insurance sector or increasing the foreign investment in insurance sector was mooted by the opposition party, the party which is now in opposition. They are the one who now opposing the same legislation which they drafted. And if you ask the leader of the opposition, why are you doing that? This was your bill, your draft. He says, my job is to oppose since I'm in the opposition. So that's why I said it's a negative sentiments are going on, and just for the sake of opposing, genuine reforms are being stalled. Similarly, if you take retail, I think the government is convinced. Agriculture, we need agriculture reforms. If I give you one example of agriculture, despite having 250 million tons this year, if you take the global average in agriculture, that if a consumer pays 100 for any item, the farmer gets 66. 1/3 is the cost of distribution, redistribution, storage, warehousing. In India, if a consumer pays 100, the farmer gets 33. 2/3 is the cost, which is the cost where in insufficient supply chain, lot of food that doesn't get to the destination, they decay on the way, lack of storage facilities. If you ask a farmer, what do you need, a house? Or what are your priorities? We've done a review in rural India, across north, south, east, west, across the breadth of the country. First and second and third requirements of farmers are exactly the same. First is education for the kids, second is health for the family, and third is storage place for their own food grains. Because the time it takes for the government agencies to come and pick up food it decays, part of it rots in their own fields outside where they stay. Housing does not come a priority. If you do a similar survey in urban India, housing will be number one across the breadth of the country. So in urban India, housing is the biggest problem. In rural India, health and education is the biggest issue, and storage. So we need some reforms in the agriculture sector. Agriculture, we have a company called Food Corporation of India, which is a 100% government-owned company. Food Corporation's responsibility is to collect all fruit, grains, fruits, vegetables from farmers all over and store it and redistribute it. This is what they are unable to do. And one of the biggest advantages of opening up the retail sector is supply chain. Develop strong supply chain. And again, each and every member of the present government is for it, other than one political party from West Bengal. And they have 18 seats. It's for these 18 seats that this reform is stalled. Now, if the government has courage, they could try and ask some of the splintered opposition groups to support this from outside, and they may go through it. I don't know whether they have the courage, but we'll have to wait and see. I hope they do, because even as recently after the West Bengal people objected to this, the finance minister in a speech in Chicago very recently, 2 weeks ago, said that we will look at it in June and we will open up FDI in June. So we hope it comes true. But we need it. We need FDI more to improve the supply chain, reduce the wastages, and let the farmers get a more remunerative price. If they get a more remunerative price, the Indian economy will move, because the purchasing power, we should increase the purchasing power of the rural folks.
I actually just have a follow-up question to the same issue he raised. Does the government actually require a majority in parliament and go through a vote for opening up the FDI in retail, or being an executive, can it not take the decision itself? Does it need to go through the parliament?
Insurance, they have to go to parliament. Retail, they don't have to go to the parliament. But they went to parliament with a draft. And because they went to parliament, now they are in a little bit of a quandary. What do we do? They went because, in a government, you need some consensus. You can't act single-handedly when you don't have a majority. If you have a majority, you can act single-handedly and go. But when you have half a dozen parties supporting you to get the majority, it is better for any bill, any draft, even if you can do by an administrative order, to get the support of parliament to make it legal. If you do it on an administrative order, the new government can come and reverse it. If you do a legislative order, then reversal is not possible. So that is the reason why it was put to parliament. It was not necessary, but it was precautionary. It is good for the long run that it's passed in parliament, and it's not an executive order which can be overturned in future.
How successful do you feel the minimum rural employment scheme has been, and what are your thoughts on the contribution to wage inflation generally in the low end in India?
I think the scheme has been useful, the National Rural Employment Guarantee Scheme. Amount of about $8 to $9 billion have been allocated to it last year, and there has been reasonable. It has gone 80-90% has reached the beneficial people. The scheme is to give 100 rupees for 100 days to an unemployed rural person, or the person living poverty line. So each family would get 10,000 rupees. Now what has happened is, this money has reached the poor people, but 90% of it is used to buy food grains. The food inflation last year was predominantly due to increase in demand, significant increase in demand. So this amount of 40,000, 50,000 crores, even if 90% or 80% reach the people, goes in buying food. So this has been inflationary, but because instead of eating one meal a day, they would eat 2 meals a day. Or they'll store this food grains for a longer period of time. Now, so far as labor is concerned, there's a fair amount of people who used to come to industrial areas which are temporary labor. They come when the farm work is not there. Many of these temporary workers from Bihar and particularly UP, when they come to Maharashtra and Gujarat, they've stopped coming because they have this money. So it is a little negative for labor because, you're sitting at home and getting money. And you have some income from your land, small land, and you get this money because you're a marginal, you come under that category that you are eligible to get this grant. It has impacted availability of labor, certainly. But I think it's a good scheme. See, we do not have a social security system in India. You have to have a social security system where some money is allocated to the people who don't have jobs or who have no means for eat for 2 meals a day. I don't think it's going to go away in a hurry. In future, you'll see more allocation to this because it's a populist move.
Front.
Over the years, it's usually been you've usually been rewarded for investing in India when the politics look bad, and you've usually been punished for selling in India on political reasons. But this time, things just look so bad. What can you tell us what hope can you give us that we don't face 2 years of just this grueling gridlock?
Well, I would say that our image is more tarnished than it should have because only bad news comes faster than good news. Good news never gets noticed. There are some companies that have done remarkably well. Some institutions, some companies have done remarkably well. And there's a huge amount of R&D efforts in many, many companies to reduce cost of the product. Because I think everyone realizes the affordability factor is very important in India. Even if you manufacture a car or a two-wheeler, what innovation we can do to bring the cost down? What can we import from China to bring our cost down? China has become India's largest trading partner in a very short period of time. And it is the largest trading partner in India. So people are looking. In fact, the negative part is that, at some time because of the growth in the auto sector, batteries became in short supply in India, car batteries. So Maruti Suzuki imported batteries from China. And this was known to the common man. And Maruti's smallest car, which is the people's car, the cheapest car. And the chairman of Maruti was telling me when a common man, whether it's a literate or illiterate, comes and buys a car, he first asks, is it a Chinese battery or a local battery? If it's a Chinese battery, they don't want to buy because they're concerned about durability. So people are very, very conscious and people are intelligent when they put their own money on the table. I would say demand in India, consumption is driving growth and consumption will continue to drive growth. I don't think that you will have 2 bad years. I don't think you will have companies in the sectors that I've mentioned show poor results because their products are being sold, they have good management, they're less dependent on government, and they're living by the books, so they are not going to be targeted by the tax or by any regulatory authorities. And I think it's not correct to generalize that every sector in India is going to be bad for 2 years and you will have to wait for 2 years to see your returns come. You can be negative, but not that negative.
Just one last question. Yeah.
No, we have brought this upon ourselves. It's our own doing. And India is no longer the flavor. We know our brand is tarnished, and we keep telling this to our people in the government. In fact, I even mentioned to the Prime Minister when there was a big meeting a month back that I'm sorry to say that I in BRIC will become Indonesia and not India unless you guys act. Honestly, I said that in a public forum.
There's a question there. Yeah.
You sort of half answered my question there in a way, but I want to sort of touch on a couple of things, more focused and more broadly. I mean, you're in the...
More focused on?
And more broadly. One was that you're in the in the housing market effectively, right? And if you look at, for example, a city like Mumbai, it doesn't really deserve the premium that it has, given the infrastructure that feeds it. And for example, I was even talking to someone like yourself, a CEO who has his company in Bandra Kurla complex, and I was saying to him, how come people like yourselves are not making your voices heard to, say, for example, the Mumbai MMRDC, etc. For example, he complains to me about having to pay for cabs for his workers in the evening, and Bandra Kurla complex was made without any infrastructure joining to it at all. And so this joined-up thinking doesn't seem to be there. And even, people like yourselves, as you just mentioned, and R.D. Godrej as well, are complaining openly about, the lack of joined-up thinking by the Indian administration. So what I'd like to sort of ask is, how come, we're not getting more business leaders putting much, much more pressure on their political counterparts and saying, listen, you're actually making it, for example, you're not stopping people like, for example, with the FDI for retail, you're not doing any damage to the Walmarts of the world, you're actually doing damage to us, your own people.
Consumers.
Yeah, and also, why can't we do simple things like even use a lot of other emerging market or even Chinese type models where, for example, if you have somebody have to come into the country, you have to do a JV with the local partner. So if you have that in law, then actually it's always creating jobs locally. So I mean, there's ways around this stuff, but why are they not doing these kind of things?
No, I entirely agree that the quality of the product you are getting in Delhi or Bombay is certainly not commensurate with the price what you pay. But the biggest issue there is land issue. If you see in South Bombay, 95% of the cost is land and not architect's fees, construction, cement, steel. 19 to 95% in parts of Bombay and Delhi are land cost. What does it show? That you have a faulty land policy. And the land policy is faulty. Bombay is an island. Singapore is an island. Hong Kong is an island. How is it growing? We are not allowed to reclaim land in Bombay because of the environmentalists. We are not allowed to reclaim land because the environmentalists say that is bad for environment and we do not have adequate infrastructure. They are right so far as adequate infrastructure is not there. So unless we have adequate firefighting facilities and adequate water and sewage facilities, we can't go 60 and 80 stories. And then the cost of land is shared between so many, that much area. So we have faulty land policy. We don't allow to, we are not connecting the island to the mainland. There are various places in Bombay where you can connect with an overland bridge. So the mainland would be accessible in 20 minutes or 15 minutes. Let that area develop. But the vested interest prevents that to happen. And it's the vested interest, land in Bombay is so politicized that various ministers have got access to builders and jointly they do this. So, that mafia is not there elsewhere. That's why I first said Bombay, Delhi is different. Delhi is less impacted. Bombay is the worst city. But you drive 2 hours outside to Pune, and Pune, you're getting at 25% of Bombay prices in the best locality, in the best quality. And it's just 2.5 hours from Bombay. So, it is just the hold on Bombay which we have to let go. We have to develop Bombay on the outskirts. And even Bandra Kurla is unaffordable now. Bandra Kurla has suddenly gone up for the office space and the residential they are coming. But it's a nexus between the builders and the local politicians that have caused this to happen. We have to break that nexus.
I'm afraid we've run out of time. Many thanks, Deepak. On behalf of CS, thank you again.